Welcome back to Crypto Meets AI. Barry here with an update for you. Do me a favor, friends. Smash that like button, hit subscribe, and comment down below. Now let's get into this. We're sitting at $3.11, trading within a range of 306 to 318, or up about 1.5% on the 24-hour. We did push upwards of, like I said, to that 318 mark, but we did come back down. We just hit like 308, I believe. Now we're bouncing back a little bit. We'll see where we go from here. But apparently, the Oxray Spot XRP ETF was postponed. So that might be why we're coming back down. Things are going to get really wild in a few weeks. I hope you are all prepared for what is coming. They have to bust the current financial system in order to set up the new one. Remember, XRP will be the solution to the liquidity crisis we will experience. And here's another well alert. 20 million XRP moved worth $61 million. This month alone, Ripple moved over 1 billion XRP. What's going on behind the scenes, we don't know. Well, I believe the institutions are getting prepared. XRP ETF delayed. What are they hiding? The first spot XRP ETF Rex Oxray was meant to launch yesterday. Instead, it's been mysteriously delayed to September 18th. The excuse? Administrative adjustments. The reality? Something far more calculated, in my opinion. Wall Street already knows. Polymarket odds gave XRP ETFs a 93% chance of approval. The flows are inevitable. The rails are ready. So why stall? Because insiders need just a few more days to finish positioning in the shadows. OTC corridors are still humming. Delays aren't random, they're signals. Every time BTC and ETH ETFs were delayed, insiders accumulated in silence. Now it's XRP's turn, except this time, the stakes are higher. XRP isn't just a speculative coin, it's the infrastructure. Think about the timing. The SEC closes Ripple case weeks ago. WEF highlights XRPL for debt tokenization. The BBVA adopts Ripple custody tech. Now the first ETF is paused. This isn't hesitation, it's orchestration. The delay aligns perfectly with another shadow movement, DNA protocol, anchoring genomic biometric identity on XRPL with ZK privacy. When ETFs launch, it won't just be money flowing in. It'll be regulated identity plus liquidity fusing in one settlement layer. Ask yourself, why push to September 18th? Because the insiders know the people will panic at delay while whales scoop up the last OTC bags. By launch, liquidity corridors will already be preloaded. The ETF isn't a product, it's a switch. This is the script. Delay, buy time for insiders. Launch, reprice XRP overnight. Post-launch, central banks, corporates, ETFs aligned on XRPL rails. The masses will think it's just another ETF. The elites know it's the reset trigger. September 18th won't just be a launch date. It's the day the rails lock in. Custody, compliance, identity, liquidity. And beneath it all, XRP Ledger as the engine. Comment down below and tell me what you guys think. Why do you think they delayed it? Because it does seem pretty suspicious to me. Remember, Bitcoin, there are only 3 ETFs. Ethereum, 1. And XRP has 19. This is the difference between utility and speculation. These ETFs will bring billions in net inflow for XRP. 2 digits loading. Newly released documents show BRICS central banks have been working with XRPL for years. This isn't adoption. Someday it's happening now. Wall Street just lit up. JP Morgan predicts the Fed will cut rates by 25 basis points next week. Translation, cheaper money, liquidity floodgates opening. Stocks could rip, bonds swing, and crypto, brace for liquidity supercharge. The last time the Fed pulled a surprise cut like this, markets went vertical. If Powell blinks, altcoins like XRP and XLM could be staring down the biggest pump of 2025. What do you guys think? Is alt season upon us? Comment down below. Were you involved in cryptocurrency during the last bull cycle? Personally, for me, I had just entered cryptocurrency when we were starting to take off. In 2017, altcoins went parabolic when dominance exploded. XRP rocketed from less than a cent to over $3 in months. Now in 2025, the charts plus macro backdrop are flashing the same setup. Except this time the target zone is even bigger, and that can mean XRP in double digits, maybe even $30 to $50 plus. Let's rewind to 2017. The others dominance chart. All altcoins except Bitcoin and ETH broke out from 2% and didn't stop until it hit 12%. That shift unleashed a tidal wave of liquidity into alts. The result, XRP went from pennies to over $3, a life-changing rally. Fast forward to 2025. The same downward trend breakout setup is forming again. Others D were already pushing 8% dominance. But here's the scandal. This time the technical suggests not 12%, but a run to 20 to 24% dominance. That's double the 2017 explosion. Why does this matter? Because dominance is capital flow. Every percentage point up means billions flowing away from BTC and ETH and straight into altcoins. If others D hits 24%, we're talking about 1.5 trillion rotating into alts. That's not a rally, that's a revolution. Now let's zoom in on XRP. In 2017, XRP was one of the biggest beneficiaries of Altseason liquidity flood. Captured a massive it captured a massive slice of the others and pumped nearly 70,000%. Today, XRP sits around $3.20. With a market cap of $177 billion. But it has something it didn't have in 2017. Regulatory clarity, institutional attention, real-world adoption, and payments. That's why its ceiling is so much higher now. Let's talk numbers. If others' dominance rips to 20 to 24% and XRP maintains its historical 3 to 6% share, here's what it could look like. Conservative, $8 to $15. Aggressive, 20 to 30. Extreme hype, 50 plus. Yes, $50 per XRP sounds insane, but that's exactly how 2017 felt too. And don't forget the macro backdrop. Back then, it was retail mania. Today, Feds are preparing rate cuts, liquidity flood, ETFs approved, institutions stacking crypto, tokenization plus cross-border payments equals adoption narrative. This isn't just about hype cycles anymore. This is the time there's serious money and use cases backing the rally. History doesn't repeat exactly, but it sure as hell does rhyme. 2017 gave us the blueprint. Breakouts on others D equals explosive alt rallies. 2025 is setting up the same chart pattern, but with 10x market size, institutions in play, and macro fuel ready to ignite. When this fires, it won't just be another bull run. It could be the largest alt season in history. The only question left is, will XRP stop at 10 to 15, or is this finally the cycle it smashes into the $30 to $50 club? Comment down below and tell me what you think. Do you think it's going to reach 10 to 15 or smash that 30 to 50? The Reserve Bank of Australia CBDC project Acacia must be one of the most advanced yet. Beyond Australia's central bank, we also see Australian Securities Commission, Australian Treasury. That's not even mentioning industry participants. That's why seeing HBAR and RBNT being selected as the two public DLTs here is such an exciting feat. The overall premise of Project Acacia is to test tokenized money with tokenized assets. There'll be 4 specific asset classes they'll be testing against, including private markets, trade receivables, fixed income, and carbon markets. Beyond Hedera and Red Belly Network, the other 2 DLTs in this project are R3 Corda and Cammets Connect, both of which are private permission DLTs. It's no surprise to see R3 Corda here, given that they have been a purpose-built DLT for fintech innovations. As a result, we see Corda used as the base layer for countless CBDCs over the years. What's eye-opening about the Acacia is that it tests both public and private blockchains together. But why Hedera and Red Belly specifically? Well, Red Belly's case is quite interesting, as it was almost written on the wall they'd be selected for this. This is because Red Belly has actually been in development since 2016. And this is further visible as Red Belly Network is directly included in Australia's national blockchain roadmap. Additionally, Red Belly has received funding from the Australian Research Council. Pair that off with Red Belly being a joint venture between the University of Sydney and Australia's National Science Agency. The picture behind Red Belly being Australia's blockchain becomes real clear. Then there's the case with Hedera. Last year, we actually seen both Hedera and Ripple participate in a CBDC case study by the Reserve Bank of Australia and the DFCRC. So Project Acacia isn't Hedera's first rodeo down south. On top of this, Australian Payments Plus isn't just a Hedera Council member. As the name might suggest, they're also a pretty critical piece of Australia's payment economy. How critical? Well, 3 of Australia's biggest payment providers, MBPay, EFT POS, and New Payments Platform had merged together to form what is an Australian Payments Plus today. And today, the merged entity is responsible for over 70% of Australians' retail payment. When all this is factored in, it's easy to see why Hedera was also included. On top of this, it's worth mentioning that Australians Payments Plus tie with Hedera isn't only with the council, but Hedera's private network HashBAR is currently also being tested by AP+. We're in the endgame phase of CBDC tests, so it makes sense why Project Acacia is one of the most advanced we've seen yet. And the fact that both Hedera and Red Belly will be playing a role, a pretty clear sign of how future financial DLT landscape plays out for central bank infrastructure. Could XRP be the global trigger? The Great Reset, WEF Poland. Even conspiracy theories are circling XRP like it's the key to the new world economy. Call it fear, call it truth. But the masses don't speculate this hard on stablecoins. XRP will divide believers from spectators. Well, that's what I have for you, folks. Until next time, stay savvy, stay stacking, and I'll catch you in the next one. If you enjoyed this, smash that like button, hit subscribe, and comment down below. And if you want more crypto deep dives, check out our videos right here on Crypto Meets AI. Thank you for watching. Remember to always do your own research. This is not financial advice.